Looking at the highs here, you know, none of us are surprised by this. I mean, come on. Now we can see how close we are. Obvious, I could say, oh yeah, look, this is what I want to see us take. But when it comes down to it, we've been calling out these highs for some time now. So we have the 8:30 opening. We returned back above that. Okay, worked in the upper quadrant of this wick, the unfulfilled portion of it right here. Okay, just somewhere to help view of a ray gap. And I'm not gonna sit here and try to be initially too hardlined on anything. Just simply because we're moving in a range, and one more minute to the 9:30 opening. Now, if I had to say something right now, I'll say that this 9:30 opening most likely will drive down. Just thinking about it logically. Okay, from the midnight opening here, we ran up, and who has been making money? Oh, obviously, the longs. Now, okay, so we'll extend that forward, and then what I'm gonna do is I'm gonna go ahead and use this daily fair value gap that we're about to be working within. Okay, so I'll use the midpoint, low, and the high. Now, notice the very deep market manipulation here. So we consolidate, slam down, very deep discount, working this fair value gap. Okay, a lot. Sell stops taken from the marketplace. Okay, if you go to lower time frames, it'll be a little bit easier to see, but we drive down. Okay, and then we create that change of the state delivery. This sets the stage for what? This daily market maker buy model. Okay, that's exactly what we're looking at here. Original consolidation, trades down to a smart money reversal at a discount array. Okay, so smart money reversal, and then returns above original consolidation in the form of buy side liquidity. So this is just classic market maker model in the form of a macro market manipulation. So we engineer buy stops up here, we drive this thing down, get everyone thinking it's going to really decline lower. Now, mind you, I was actually looking to see if we can continue lower. I was actually one of those guys that wanted to see if we can get lower prices towards that weekly wick. But quickly adapting, we were able to really, long this thing, especially last Wednesday, make money on that idea. So just market manipulation 101. We engineer stops, drive it down, okay, get market sentiment to shift lower since all we've been doing is trading higher. So people want to start seeing shorts now, and that's the perfect counterparty to get them in at a lower price, and they use that, accumulate it, to distribute above, where we have willing buyers at a higher price for their buy stops up here. So the deep pockets, that's where their buy stops are right here, all right, as well as all-time high. Previous weekly high ran, and now we're beginning to wick off aggressively. Now, I want to lay this out here. The only reason why I'm not like very, very hardline bullish and just like only looking for buy setups, which I would be if it was just any old regular day. But today is the day prior to FOMC. So like I said, even though we are very, very close, I definitely would not be surprised to see them leave this intact for FOMC. So now am I going to try and force that idea if it's not there? Absolutely not. But if we get something that we're able to capitalize short and leave this intact for FOMC, that would be nice to see. So yeah, ES ramped up as well. Okay, took the engineer buy side liquidity. So what happens here? And how many times have we seen this just in the last week or so? Right. So here's our 8:30 high, wicks up, creates the high, trades back up again, matches the high right here, trades away. What does this do? Builds quote unquote resistance buy side liquidity up here. Okay, and then when the time is right, which in this case was 9:30 a.m., ramps up there, takes out winning buyers at a higher price, accumulates those orders to distribute them lower, and now I would assume we're going to begin to attack those who have been making making money on the upside here this morning. Okay, so we just came down and took this short-term low here, immediately displacing out of that. Now, keep in mind everything that we're saying here. Okay, we're still, like I said, by classification, still in a consolidation. But if I had to pick a side right now, I would like to see us move away from the consolidation to the downside. Okay, and I would view this as our nearest term draw. So sell side liquidity resides down here. Okay, so multiple times stabbing up above, create that mohawk within this tiny 1 minute gap here. Okay, now would I view this gap as a short? Not particularly. Okay, it's 9:37 a.m. We're, all we've been doing is consolidating. All right, and this is the first small little fair gap that formed, out of this displacement link. But I'm not interested in it because it's just a little bit too early on. Okay, we have a lot of excitement going on, and I would rather just wait for something more clear and concise. So what I'm going to do here is with this sell side liquidity here in mind that, you know, I prefer us to drop down into. I'm going to go ahead and map out this 15-minute foray gap, and we're going to study what we do with the high, midpoint, and low. And then if we take our fib, okay, I always tell you guys first low that was formed at midnight, okay, but I'm going to use this one just because it's, you know, right by it. And I'm going to use this to the high. Here's equilibrium. All right, so here's our near-term sell-side liquidity, but then below equilibrium, do we have anything? Well, if you take a look, you can see these relatively equal 15-minute lows, and then you can see this discount for Vega. And we're bearish. We have a predetermined bias. Okay, we have previous weekly high swept, and let's say we just disregard this 15-minute for Vega. But whenever I see that, I would automatically start to look at these 15-minute lows and then this discount imbalance left behind from London session. All right. So yeah, this is usually like the type of thing that happens when you try to force an entry too early. So you really like I always say this, like the earlier the entry, the more you're going to be stressed out. Okay, and that's just because you know, the better entries always come whenever the dust is settled. Okay, so whenever things are a little bit sideways, you know, slamming up and down and just like not all there yet, and it's early on in the session, okay, that's a recipe to get stopped out if you're, you know, trying to do anything premature. One more thing I'm going to show you guys here is we do have a significant regular trading hour gap left behind. So, I mean, usually we have that anyway whenever, you know, London session was heavy. So you can see a very clear regular trading hour gap here that's going to be left behind. And, you know, 90% of the time, it's definitely not really the best move on the deck to, you know, try to be longing when we have regular trading hour gap left behind. So at the very minimum, we'd want to see, you know, the upper quadrant worked in. So yeah, definitely nothing I'm really trying to jump on right now. That's for sure. Kind of just watching the tape here. Now, do I think this is going to be a seek and destroy session? I don't really think so. Okay, I think we're going to really get some stuff intact for FOMC tomorrow. You know, we'll stay optimistic here and see what, you know, really comes underway here. What do I do in these conditions? Well, the same exact thing that I did yesterday. Okay. Through this, remember this? We sat through all this. Yes, we did. And what did we do? Well, we just sat on our hands, stayed disciplined because the model was not there. And that's us following our plan. Okay. And that's all you can do. All right. So, days like this, right? They really add your mental fortitude and sharpen your psychology, right? And it's very, very important for your growth and learning, especially when we enter a day like this, because when we see this from yesterday, and we sat through all that, we stayed disciplined, followed the plan, then we come into a day like this, and we're easily able to sit through the short-term uncertainty, and then when the ball really gets rolling here, guess what? We find our model, find our entry, and that's it. I really want to see this. I don't want to see this stop here, okay? I want to see this really, really just lose the floor here and, you know, gun straight for this low here. Okay, that's what I want to see. So we have a fractal 3 drives pattern up into the 930 opening range high. So we trade up here, trade up a second time, taking a short-term high, and a third time, taking another short-term high. So buy stops on a short-term basis continuously taken. So whenever you see this here, 3 drives higher, okay, this high really does not need to be ran, especially since this high took out previous weekly high that we already mapped out. All right, so this is what I like to see here. Okay, that aggressive expansion. Okay, like I said, I want to see this continue. Didn't want to see it stop. And I want to see it pierce straight through the low here. There we go. Beautiful. So with us disregarding this gap now, what I want to see? Well, the exact thing that I showed you guys that was left behind in London session. Okay, these 15-minute lows and this discount gap. Okay. Now, what happens when we drop down into here? Okay, what if I don't find, you know, something that I like in terms of entering on the short side? Well, really what I'm looking at mainly is us dropping down into here and then framing some type of long setup. Okay, so there's the sell side tagged. Beautiful. All right, so there's the foray gap delivered. Perfect. Now the real thing here is what I'm really speculating, is this going to come to fruition? Are we going to see some type of buy model perform now that we've dropped down into this short-term discount? And also important to note that we worked in, okay, half of this regular trading hour gap. So if you take, so you guys already know the deal here. Like, I'm not going to try and buy up here, right, just off my idea. First of all, I need to see this wick worked in, all right, on the 15-minute basis, and then it'll be more reasonable to buy this thing, okay? So I like what we're seeing here. I like how we're coming back up, okay? Immediately attacking those who shorted. So I'm understanding that this could have been, you know, some type of short-term scalp, but keeping the long-term idea in mind here. So okay, yeah, ES not really giving me much here, to be honest. Now, like I said, this definitely would be a high probability long entry for me if we weren't leaving behind this wick here. Okay, so I want to see 25% worked in. All right, so there's 25% touched to the tick. Okay, now this would be enough for me to look for some type of buying opportunity, but it always could go down to the midpoint. But really the preferred method of trading here would be to respect 25% and just go away from that, because then we'll understand that this thing will be very heavy to the upside. Okay, so here's our wick quadrants. We can now easily study them in the lower time frames because I've mapped out here. Looking at this up close candle here, really we'd want to see that hold. We did close just a tiny bit beyond it. Okay, but that's all right if we really get aggressive expansion out of this. All right, beautiful. I like that. I like that. So if we go to the 5-minute chart, you'll see that we just disregarded this 5-minute gap, which is what I want to see clearly. Next, I would want to see us obviously get through these up close candles, but that's not required for me to take an entry. Okay, so what I needed was this 25% to be worked in, and we got that. All right, and then we have an SMT divergence, ES failing to get down to that London gap. All right, so we just touched the high end of this 15-minute inversion here. Beautiful. So exactly as I would have anticipated, we're beginning to form the buy model. All right, there it is. Beautiful. So we just got straight through this opposing 1-minute gap. So the question here, does it offer me an entry point? A sound one. I like this right here. Okay, it wicks down, touches the 15-minute balance inversion, and then the very high of this up close candle here. Okay, so admittedly I would have wanted to get the best entry, which would have been right here. But as you saw, it like was wicking away by the time I was really considering it. And at that point, if I were to be buying up here, then I'd just have to open my stop loss a lot wider than I typically would want to fit my risk management plan. So in that case, I just simply wouldn't chase price. Okay, I just need to find something that suits my risk management model. All right. All right, so I like how ES is following. Perfect. Really, ES should be the leader to the upside anyway. So I'm glad to see it get up there now. All right, see how I banged down at the low end of this inversion gap here, kind of coming up off of that. So what I'm eyeing up here is, or what I was eyeing up was if we were to get some type of Fourier gap entry right here at ES, but it's just kind of skirting off there. So assuming many people would have thought this thing to be bearish as soon as we dropped down here, I was actually, I don't need to explain because you guys heard me say everything real time, but as we drop down here, I was just expecting this to serve as the catalyst to then springboard us higher. All right, so in my opinion, one entry point did present, which would have been right here. Okay, I wasn't fast enough to it, but really looking to see for that second opportunity. Typically, there's a second subtle little means of an entry, so we'll see if that is yielded to us. Whether that's on a 5-minute, 3-minute, 2-minute, 1-minute, doesn't matter. Okay, wherever we find our footing at. All right, so notice how ES is continuing as the strong one, where NASDAQ kind of hesitated a little bit here. Best signature you want to look for if you're looking for buys is going to be 25% of the wick, and it fails to get to midpoint. So whenever you see that, that's you're going to see some type of aggression, which on a short-term basis we have seen. Okay. Now, so let's say that I was so lucky to get buy right here. First of all, my stop loss would be below the body of the down close candle here. I would be partialed out up here. Okay, I would take a partial right here, and then stops would, get trailed up above this candle's low right here. So the trader would be paid, and risk would be cut in half. That's basically what I'm saying. So I was looking to see if this 2-minute candle would be so kind to get down to this gap, but it just failed to do so. Like I said, I'm not surprised by the aggression here because we see 25% worked in and it fails to get to 50%. So what did I tell you guys? Whenever it does that, I typically expect some type of aggression. Okay, and there you go. There's ES ramping straight up into the buy side liquidity there, with the manipulation lower. So that is beautiful. Now, as for ES, did ES offer a sound entry point? In my opinion, no. Okay, all it did was just slam up and, no resistance. It went straight up, no retracement. So, in my opinion, no entry on ES. But as for NASDAQ, this right here would have been just fine. So, Algorithm, it is good to see you back. It is good to see familiar faces here. That is for sure. So, in my opinion, at least for, an experienced individual like myself, this was obviously a very, very easy, predictable market. So, as I mapped out these levels, okay, that was delivered. And then from there, I'd like to see that serve as a catalyst to get above the highs, which it has done. So, check mark, check mark. Now, it comes down to, I was a great analyst today, but when it comes down to the actual trading and executing, okay, ES did not offer anything that suited my model. And then NASDAQ, really, if you really wanted to get in there and just come in hindsight or, lifetime, this here would have been a permissible entry. And then you put your stop below the down close candle here, right? But other than that, nothing really clear cut, in terms of like an order block or for value gap that I would have like to see on NASDAQ. So as we drop down to 25%, there we go. There's my model kicking in, and that's when I look to take a trade. So after we work in 25%, I don't know if it's going to go the whole way down to 50%. That's why I wait and see what it does once it touches 25%. So in this case, it respected 25%, displaced, and then let's say that this right here was a little bit extended, okay, on the, so let's go back to the 2-minute chart. So let's say that this, when we hesitated here, let's say that we wicked down into this fair value gap with the inversion. Okay, that to me would have been a very good clean long. But in this case, okay, it was just one of those predictable movements, but it wasn't particularly the easiest thing to get in sync with, especially on ES. Okay, you would have had to like buy the turtle soup and with hopes of it not trading below here like NASDAQ did, right? So what do we do now? Well, we look for exactly what we're seeing here. Okay, we look for deep displacement up off of that terminus here. So we notice how we traded up into mid gap, midpoint of that daily for value gap that I showed you guys. Obviously spiked above the buy side liquidity. So we have a very key liquidity point ran. We have an SMT divergence. NASDAQ is not showing that same willingness as ES. Okay. If you take a look, all we did was return back above 930 opening here. Okay, so we don't particularly need to take this high on NASDAQ because, number one, this high ran previous weekly high, and number two, all we're doing is working in the midpoint of the wick here, and we're turning back above 930 opening. So if we begin to see some type of opposing idea manifest, then, that's the type of thing I'll be looking at. But in this case, key levels were delivered, particularly on ES, so that's kind of the moment where you just need to, take a breather and let the market set itself for at least 10 minutes. Alright, so let me take these levels off because they're no longer needed since we already utilized them. So on a 5-minute basis, you can see us wick down into the very high of this 5-minute fair value gap here. And then trade into these opposing up close candles here. Okay. And obviously that's holding price where we stand now. Like I said, I can definitely frame an idea to the downside at this moment with what we had take place in the marketplace now and the terminus daily delivery on ES. So in that case, I would just kind of, just watch price do its thing for just a little bit longer, okay, before I try to really jump on anything, okay? So let's see here. Yeah, it's only 10:15 a.m. So definitely some room here. All right. All right. So notice as soon as we take the high, what does this 5-minute candle do? Wick to the downside, wick to the upside. So it's kind of back and forth here as soon as we touch the high, which is really, like I always tell you guys, a clear depiction of the market being flooded with orders as soon as we touch this high. I mean, what do you guys think happens? Like, it's very, very obvious to see this high up here, and it's very, very obvious to know that deep, large funds have their buy stops above here. Once they're taken out, number one, they're upset. Number two, the market is being flooded with orders, and you can expect volatility up off of that high, because we're trading into a very key pool of liquidity on a higher time frame basis. All right, so we're not just tapping into some short-term low intraday. Okay, this is a very key high that was just ran. In this case, okay, we wicked off. I'm now beginning to touch, number one, the old daily high again. We're not done with the daily high just because we swept it once. Okay, the algorithm continuously references it as long as it keeps sweeping above it. Every time it sweeps above it, that's a run on buy stops. Okay, and okay, like I said, we worked in the midpoint of the 5-minute wick. Okay, not ES. Nasdaq's starting to look a bit weak here, or just indecisive, I should say. Okay, worked in the very lower end of this 5-minute wick here. Like I said, we returned above 930 opening. Okay, so this could be a catalyst to accumulate short positions. Now that we created the SMT, the previous weekly high has already been ran on Nasdaq. And let me go to the daily chart for NQ actually. Okay, so at the very minimum, it would have been nice to see this rejection block touched into right here for NQ, but ultimately it just fell short. So we're going to see what takes place here, particularly around 1030. 1030 is a very key point in time where, kind of in the middle of the silver bullet area. Would I try to long the sell stops here on a short-term basis? Definitely not, because like I said, we left behind this rejection block. Okay, the two clean bodies here with the wick. So anytime I see that, okay, it's a clear indication to not buy in, okay, because I already know it's going to revert back to that with a great deal of certainty. So, okay, ES just matched the high that ran up into the buy stops here. That's way too clean. That's going to be definitely upset to the upside. And let me see here. This high comes in at 5,733 and a half. This high comes in at 5,733 and a half. So yeah, these highs are to the tick equal. So very beautiful stuff here, guys. What can you get out of me predicting the market like we saw today in terms of trading down here and then slamming up? To go against those who think it's going to continue at this moment, even though we know the main draw resides up here. Okay, so what can you take out of this? Well, simply just knowing and understanding and being comfortable with the fact that it's true that we can really accurately predict these markets because of how manipulated they are. Okay, so you can definitely absolutely predict these markets on a daily basis, and with that information, we know that we can pick up on things that repeat and obviously make a career out of it. Now where it stands now, it's very, very hard for me to try and form, some type of long continuation bias when we deliver a level of this stature, okay, which is the daily buy stops, and especially when we see like this left behind and the SMT divergence that's underway. These type of things begin to make me speculate some type of reversal and then start looking at lower arrays. Okay, so in this case, what I'll be looking at, I'll be looking at the low end unfilled portion of regular trading hour gap. I'd be looking at the Asian session lows here, and same exact thing on ES. So right here, down below here, this can be sell side liquidity, and then this will be the unfilled portion of the regular trading hour gap. So should we get signatures surrounding a bearish idea, then that's what I'll be looking to target. But as of right now, I don't really have anything to do so. Okay, so notice how that works. Okay, so I have a predetermined idea initially, okay, but I'm waiting for the moving parts. I'm not trying to force that idea onto the marketplace. Okay, I do like the swing high formed here, working in the wick and then displacing out of 930 opening though. Okay, so we're going to continue to watch this here. This would also be classified as a failed intermittent term low. So this wick, if you go to the 5-minute chart, you'll see this took us down to a 5-minute imbalance. So as soon as we create that swing low, that's classified as a rebalancing intermittent term low. And to the right of it, we formed a higher swing low. Okay, displaced higher. That's an intermittent term low. And the fact that we just collapsed below that, that to me is a significant shift in structure. Should it continue? Okay. Now, as for ES, I'm never going to try and pick some type of top. Even if we didn't have relative go highs up here, I'm never going to be the guy that, absolutely picks the top. Now, if it's there, if it's really there, and it's obvious to see, and there's an entry point and there's a sound stop loss I can have, then obviously I'm going to get in there and, you know, try to catch a reversal. But the worst hindrance, definitely one of the worst hindrance I had in terms of reading price action early on, was trying to always catch the reversal rather than simply just staying in tune with order flow. Okay, so yes, it's nice to catch reversals when it's there. Okay, when it's actually warranted, day of week aligns, you know, all that stuff. But a lot of times when you're trying to force reversals rather than, you know, respecting the current whatever order flow it is, you're really just going to get frustrated because you're just going to keep making new highs. Okay, so don't be that guy. Don't be the guy that always tries to pick the top. Okay, allow it to come to you. Allow it to be easy, free flow, and, you know, just nothing forced. So I definitely would not be surprised to see this thing ramp up quick. Now, keep in mind, do these highs have to be ran? Okay, absolutely not, because we swept that daily buy side liquidity here 3 times. Okay, that's more than enough to send this thing into a sell program. Okay, at the end of the day, we've swept a very key pool of liquidity. You think the market cares about these 2 little 1 minute highs more than, you know, the fact that we swept this? No. Okay. Okay, definitely keep this level extended out. Okay, this will be that old 15-minute gap that I showed you guys earlier. So I'll continue to remind you guys, nothing is going to be forced in price here. All right. When it comes down to it, I am seeing subtle bearish signatures, but there is no entry point. Okay, there is no realistic sound entry point when I'm seeing in here. Okay, but the signatures that I see suggesting, you know, at least the intermittent term sell program down here is number one performing at fractal intermittent term low. Following the raid on this internal high here, we failed to get above here. That's obviously SMT divergence. Okay, we returned back above 930 opening. All right, and then we broke an intermittent term low, and then on a 5-minute basis, okay, you can see that we formed a 5-minute swing high, worked in the wick, and then left it. Okay, so all this to me is bearish signatures. Okay, but if the setup's not there, it's not there. Signatures is different. Whenever I talk about signatures, that's subtle things that you look for while you have a hardline idea and your entry model is underway. Okay, so you can have signatures, but if you don't have one of your models to support it that perform in price, then you just don't have anything. Okay, you just simply have, you know, a study point of, you know, studying price. So I wouldn't be surprised to see if ES ramped above the highs here. Let's see if it'll load for me. There we go. Alright, so it looks like ES is going to revert to the 1-minute highs are placed in here. Okay, which is reasonable. So what's key here is what do we do as soon as we reach these highs? Do we see immediate feedback, or does it kind of just hang around and then continue higher? Okay, at that point, I'll just kind of let it go. Okay, so Nasdaq not respecting this idea at all. Okay, all it did was run below short-term low and immediately displaces above. We have a change in the state of delivery. Okay, this down close candle takes us down to the low. This down close candle sweeps the short-term low, and then we displace above, creating a fair value gap. So this would be classified as a change in the state of delivery and high probability order block right here. Okay, it's 1-minute down close candle. Okay, let's check the 5-minute. Okay, I mean, I look at the 5-minute time frame. We're just kind of banging back and forth, which is reasonable because of how key the level that ES ran was. So I'm definitely not surprised to see this price action following the raid that ES had. Okay, so that's why I said you just need to relax and, you know, let things be set in their ways before trying to force something immediately whenever a key level like that is ran. Okay, that's the last thing that you want to do. All right. Okay, yeah, this is a little bit too fake here now. Okay, we're coming back. Now we're making a third exactly equal high. Okay, I just see this as engineered liquidity. This is a little bit too artificial for me. So remember, guys, whatever we do today, which obviously I can't, you know, get out a genie ball and tell you exactly what the outcome of today is going to be. But whatever happens and what we come out of today with, we understand that tomorrow the protocol. I'm not going to be seeing it in the morning because we don't really care what the morning does prior to FOMC, because that's never something I consider or ever consider trading. Okay, it's just a means of disaster and a waste of time if you're trying to trade the New York session prior to a FOMC day, because all it's going to do is build in liquidity prior to FOMC. Okay, so 2 p.m. Yes, that's the initial raid. Okay, are we trying to trade that? Obviously not. 2:30 p.m. There you go. We're now entering our FOMC, what we call kill zone. So 2:30 to 4 p.m. Anywhere within that 1.5 hour time interval, that's valid for trade entries. Okay, and it's very very likely it'll offer something. Okay, there's very few FOMCs that we haven't traded. All right, successfully, because it's usually very very easy to trade, to be honest, after the release. 30 minutes after. Okay, notice I'm saying after, not in the first 30 minutes of the FOMC. Okay, so 2:30 to 4 p.m. Be ready for it. But understand where we're at in price here. Okay, it's 10:30 a.m. Okay, still young in the session. Yeah, definitely would have been nice to see ES notice that short-term retracement. But when it comes down to it, like, I can look at this in hindsight and be like, well, I mean, I literally predicted it before the fact. Why did I not enter? Well, listen, it's never in the cards or suits any of one of three of my models that I utilize and teach to you guys. It's never a part of that to buy as the market's rising up. Why not? Because if I'm buying as the market's rising up, number one, I'm opening myself up to, whether, more retracements than I should. And number two, I'm going to have to open my stop loss a lot wider than I would want to. So by default, I'm going against my risk management plan if I'm buying as the market rises up. You never want to do that. You want to buy as the market's trading down. Okay, maybe that doesn't feel comfortable, but eventually you're gonna, get into the groove with it. So, an example would be like, let's say we close in this 1 minute candle and then we wick down on a short-term retracement into some type of Ferrari gap and inversion gap. Okay, that to me would be a valid trigger point. Okay, but if all it's doing is rising up and tagging the high, there's nothing I can do. All I can do is just respect the precision, pat it on the back, and, wait for the next opportunity. Okay, that's all you can do. Now, the last thing you want to do, let's go to the worst, bottom of the pit type of stuff you can do is be so angry that you missed out on this, even though you knew what it was going to do before the fact, and then really just try to just force something after that, and then, you start getting stopped out on low quality price action, even though you knew this was the easily anticipated move rather than what you're trying to trade now, right? So we're leaving this 3 highs intact here. We're going to displays here. Just created the volume imbalance, which, yeah, I'm not surprised to see it wipe that clean right now. Okay, I mean, nothing I can really say about NASDAQ, to be honest. It's very, just sideways. Okay, yeah, so based on what I was just saying, a perfect example, now that I'm looking at it, a perfect example of you trying to force a long setup right here. Why is this not something that we would enter on? Why? Because ES delivered the daily draw. It really is that simple. Whenever we have key daily draws delivered, okay, you don't try to, jump in price action right away, because very specific things happen when we do so. It floods the market with orders, and it's a little bit, just not as eventful as you want to be after at least 10 minutes. Okay, so really what you want to do is calm down, understand that a very key level has been ran, and you don't try to force a continuation. Never do that whenever either or of the averages touch a daily high like that. Okay, that's the best advice I can give, because I used to make that mistake early on as well. Thinking that it's going to continue. There is models. Don't get me wrong. There is an optimal trade entry model straight out of 2017 teachings of an optimal trade entry after previous daily high or whatnot is ran, or previous weekly high, previous daily high, doesn't matter, is ran. But that's just not the case that we're looking at here today. Okay. NASDAQ is not finding any energy whatsoever to even entertain the opening range high. Okay, we have no willingness to get up there. We're forming an intermittent term high above 9:30 a.m. opening, moving sideways, ES kind of, all it did is consolidate once we reached that high. So there's really nothing here for us to do on ES either, okay? So remember, always revert to that 5-minute time frame, okay? Or 15-minute time frame, doesn't matter, but whichever one suits you better. But all right, so yeah, what I do here is I'm gonna go ahead and map out this 15-minute gap in price. Okay, so I like how we're dropping down to the low end and getting below it. Beautiful. Let's see if it can continue now. I don't want to see it hesitate. I want to see it continue. So, you know, this rolling back up right away, that's not something you want to see. Okay, NASDAQ, we can kind of tread lower here. Perfect. Now, the key here is, do we really have the body aggressively displace lower rather than just wicking up like we see here? Okay, that's not what you want to see. You don't want to see continuous wicks back and forth. Okay, you want to see it really displace. Okay, and remember, if you pull your fib, okay, this here would actually be a time-based imbalance, so similar to how we use for value gaps. Actually, not similar, exactly how we use for value gaps. Same exact thing for wicks, okay? Here's our 9:30 a.m. open range wick formed, okay? Here's the midpoint. Look how many times we respected it, okay? We trade up in here once, wick off, trade up again, and, you know, so on and so forth, but where do all the bodies reside? Not even close to midpoint, okay? So that, to me, in and of itself, is like a subtle, like, bearish poke, like, hey, I'm starting to accumulate short positions and I want to send this thing lower, okay? Now, once again, as for an entry point, I just simply don't see it, okay? Especially on ES. So this is one of the moments where, you know, I definitely wouldn't force an entry point because really all we did was drop down, take a short-term low, and then the 15-minute fair value gap. So I need to see a little bit more, you know, prominent, dominant bear signatures for me to really engage. Okay, so that would look like, you know, like the 5-minute continues here, closes below the 15-minute gap, and like really just displaces and then creates some type of fair value gap and then works back up into that for redistribution and then trades lower. All right, so there we go. That's what I like to see. Okay, we just completely disregarded this 15-minute gap. Let me take that off. So now what we're going to do is we're going to look for an entry point, okay? And what we're going to target is what I already showed you, okay? It's going to be regular trade narrow gap, the unfilled portion here, the low, near term is going to be the low, and then the very low settlement closing of the regular trade narrow gap, all right? And then, yeah, same thing for ES. Okay, you don't want to see this wick remain here. You want to see it really remain heavy, all right? Now, notice this little breaker that we had in price here. Okay, so as soon as we get below the body, okay, that creates the breaker. Wick up again to the midpoint, okay, and then trade away. So yeah, that's exactly what I would not want to see if I was looking for some type of short entry. Okay, trades below, bumps a short-term low, back into this all balanced price range, and immediately wicks back up. Okay, so there's no entry point here, right? So if I were forcing any ideas within the last 30 minutes, I would have been frustrated and stopped out. But luckily, we don't do that over here, all right? So you are in good hands. Just allow me to guide you, and we will absolutely make a very respectable amount of money, okay? Not demo. So 15-minute body remaining relative to this 15-minute fair value gap low here, okay? So that's kind of what I'm looking at. And then on a 5-minute basis, and Trading Brew is being really sluggish for me today. But anyway, on a 5-minute basis, we trade down to these two consecutives. This right here will be a classic bull shorter block. Because these two consecutives do what? Take us below the low, shifts above. This here is a breakaway gap, so another thing I'd be looking at is how we fail to get to that as we touch the order block. okay, and immediately roll back up. So I don't view this as any bearishness whatsoever. Okay, trading in this Farag gap, that's not bearish. Okay, that's actually a bullish signature trading up into here. So yeah, everything that I'm seeing now, notice how quick the tide can shift. Everything that I'm seeing now, especially with us delivering off this bounce price range like this, I would just like to see NASDAQ completely take this opening range higher at this point. Okay, so I was initially trying to be optimistic for some type of reversal, but honestly, the market, with everything I'm seeing here now within the past 10 minutes, is completely suggesting pricing up into this high. Okay, so this is going to be my near-term focus. Let's see if the market can give us clean delivery like it did with this run up here. Okay, so very, very promising to see price action like this after what we had Friday and Monday. Now let's see if we can continue this, what we saw in here. All right, so notice how we're just completely disregarding this for Vega gap. So maybe someone would have tried to short this. I don't know why, but if you look at it, what do I tell you guys with the wicks? Rolling down and rolling up. Okay, it rolls down, sell side, rolls back up, there's buy side. Trades down, gets below it. This wick low to this Vega gap high, that's all balanced. So if you see price trade up into it, okay, that's not some type of sell. Okay, that's absolutely a bullish signature, that the fact that we even traded up into here. All right. The more you know. So yeah, notice how the body is nowhere to be seen within the 15-minute gap now. So we rolled beyond it, which typically is reasonable as long as the body stays within it. And I mean, it's well beyond this small 15-minute gap here. Okay, we can all see that. I'm telling you guys, this exact price action here, when we sit through it with discipline, this is the exact price action that turns away give me it now mindset, guys, which typically never make money. Okay, if you can really sit through this with a smile on your face and not let it discourage you, and the fact that, you know, not enough action's happening, oh, we're not taking enough trades, this and that. If that's not your mindset, then you're absolutely going to do exceedingly well as comparing and contrasting to other people, because we understand that it's Monday and Tuesday. Okay, a lot of times there's going to be setups, but a lot of times on FOMC weeks it's also going to be a little bit just subpar, and we're just going to have to simply submit to the economic calendar, which would be the best price action comes after FOMC. Okay, so whenever people sit through consecutive days where it's just like a little bit, you know, iffy, you know, that's where it's going to determine, is this person going to be a trader, or are they going to be, you know, just someone that quits and throws in the towel because they can't sit through price action where, you know, it's uncertain, or maybe, you know, just not enough, you know, dopamine receptors are being hit, right? But yeah, that's pretty much it, guys. So you know, Friday, okay, Friday, Monday, these are the exact days where people lose themselves. Whenever, like, they just can't see through that window. There's, you know, they're just completely shutting a blind eye to the rest of the forest that has so much better things to come. And what I mean by that is, you know, you sit through days like what we had in the previous days, where it's really just banging back and forth, and it's a day where you may be frustrated, or, you know, just things just aren't going your way. If you preserve capital and conduct yourself well through that, I promise you, like, in one day, your entire trading career can change just off one setup. Okay, that can really get the thing going. So, in this case, Wednesday. Okay, what I really keep reverting back to this Wednesday, because these are the type of days that we wait for. Okay, you guys saw how much money I made utilizing this setup last week, right? And if you lose yourselves in the days around that, I keep stressing this, guys, to you, because it's very, very important. This is literally profitable trading, what I'm explaining to you right now. The days surrounding this is where people lose themselves, lose their money, and get discouraged and quit and throw in the towel, because they can't do it. Okay, they don't have the discipline, they don't have the wherewithal, they don't have the patience, they don't have any of that stuff that really is required to do this thing consistently. But by the time we reach this day, okay, they're done. They already lost their account, they lost equity, whatever else. They lose themselves in the days where it's not obvious. But when it becomes obvious, this is when you really want to be in the marketplace. Get in there, take your profits, you're done. You're done. Put your account away, you are done. You made your money. Okay? Please tell me another profession or anything else where you can just get on a laptop, press buy or sell, and make yourself some money. Okay, it sounds very, very simple. That's what everyone wants, right? Everyone wants that. But nobody wants to sit through days where, it's not that exciting. It's not, giving us 5 setups in one day. It's not, it's just not easy. Okay? So, really getting through days, especially, I keep reverting to, where's that? Friday, just because, I mean, come on now. Look at this. You're really trying to tell me this is something you want to trade? Anyway, very, very important stuff what I'm saying here, guys. Okay? Stay composed while it's not obvious, and when it becomes obvious, get in there with no hesitation and aggression, make your money, and leave it at that. Okay? So conduct yourself well at the subpar days. Get to the salad days, what we call it. Execute. Everyone can see it. It's obvious. Okay? Everyone's taking those trades. Every single person on social media is posting up, and hey man, did you take that too? But guess what? They're not profitable. Why not? It doesn't make sense, man. They're catching these good trades. How the hell are they not profitable? Exactly what I just explained here. Okay, they lose yourselves in the days where it's not easy like that. Okay. All right, but anyway, here's the buy side being delivered. As I was explaining that, it's kind of like side-eyeing this Survey gap. Okay, if we would have got to dip down into that, I mean, obviously that would have pulled the trigger, but all we did was kind of mess around here, and then boom. There is the high delivered. Okay. Let's go on to ES here. I'm sure the triple top. Yes, there we go. Beautiful. So the big question here is heading into the 1050 macro. What are we really going to do with this 1050 to 1110 macro? That's what I'm kind of wondering. Really working in the upper quadrant of this fair value gap. Not really showing signs of slowing down from what I'm seeing. Daily time frame. Yeah. We are very, very close to all-time highs again on ES, which is, I mean, crazy, right? It's kind of weird seeing that whenever we look at NASDAQ, and it's nowhere close to the all-time high up here. But what I'm thinking, potentially, which would be very nice, actually, because that would literally just be an ATM machine, but if ES really just slams above this all-time high and NASDAQ fails to do so, and then we create some SMT on the daily chart and then displacement, heading into fall, that's absolutely going to be an ATM machine to start selling. Every single daily candle, we're just going to look for the same thing. Open, trade above opening, trade lower, which is bearish power of 3, and that would be the quarterly shift. Okay, so an SMT divergence with the proper price action supporting, all-time high being ran, and NASDAQ not running it, going into the fall months. So that would be in tune with the seasonal tendency for fall to kind of shift lower, okay? And honestly, yeah, running above the all-time high and ES lagging behind would be the perfect opportunity for that. So we will definitely be looking at that. Man, yeah. Anyway, this thing really just does not want to yield me an entry point. So nothing in here, to be honest. Trades down here. Leaves that rejection block. Remember what I said? Okay. Leaves that rejection block intact. We leave behind a very large 15-minute wick right here. And then on the 1 minute, even if I did want to enter with, ignoring the wick and the rejection block, even if I wanted to, it didn't even retrace even to the volume imbalance. So it really doesn't give me anything to work with in terms of entering just yet. But saying that, on the contrary, we're entering 1050 to 1110. We have now swept terminus buy side on NASDAQ, and ES has now cleared the engineered buy side the quarterly above here. Okay, so anyone that was trying to be a short seller in here, where's their stops going? Right above here. And like exact thing I was explaining to you guys when we kept continuously driving up into new all-time highs earlier this year. Every single time we trade into key highs, okay, we make new highs. They always create these fake tops. Buy stops go above them for the guys that want to pick the tops. They drive it down and then drive back up. It's the same exact stuff every single time. They make the top. They sell the top to who? The retail minded. And then they do something like this. Okay, that's the sucker play. All right. So whenever we're directional, okay, a lot of times you'll see a consolidation, particularly when we hit a key level. So in this case right here. So once we get that consolidation and then it drops down, okay, that would be inducing short sellers. They use that by taking the sell stops here, accumulate that to distribute it above, okay, to go where it really wants to go. So in short, what is this? This is a fractal 1 minute market maker model. So original consolidation, smart money reversal, trades above the original consolidation in the form of buy stops. Okay. So watch this 1 minute gap here. Okay, we're gonna see what we do here. And as for NASDAQ, I want to see if we can really just rip through both of these gaps here. But yeah, like I said, this thing is just like defiant. It's like it has ODD. This market really just doesn't want to give me those short-term retracements that I seek. So I guess it's good it didn't give me an entry point on this 2 minute retracement. I would have been in profit and certainly took partials above this internal high, but it kind of falls off after that. But then we come to here, and this just looks very obvious to me. Okay, so if I were to buy into this thing with a sound stop loss, I would require it to at least get to the high end here. And then stop loss will go below this candle. So in this case, that'd be 774 or 775. Okay, so about a 15 handle stop loss. On NASDAQ, that's pretty reasonable to me, especially if I'm sizing down to like maybe I'll probably do like 4 or 5 micros on this. But just thinking about it, you know, if I don't wait for the retracement, I just buy as it's rising up. Well, guess what? Okay, rules say if I'm buying here at let's say 800 flat, 19,800 flat, right? Where does my stop loss go? Well, it has to go below the fair value gap because I understand that it's liable to fill this entire thing in. Okay, so once it trades, you know, it trades up here. If I tried to force that idea, okay, yes, in this context, it would have had little to no drawdown. But does this happen a lot? Is this likely? No. It drives up, okay, would have been successful. But in this case, let's say I bought in as it's rising up. Like I said, stop loss will got to go below here. Okay, that's now a 25 handle stop loss. Is that favorable to enter the marketplace? Do I really want to open myself up that much risk? Okay, on one singular play? Absolutely not. Okay, because that would just simply go against what has made me profitable, which is keep the winners a great deal larger than the losses. Okay. So yeah, I like the high being ran here, as I was anticipating. And now we're just going to really see what this thing does with us spiking above that. So we just entered 1050 macro, so 1050 to 1110. That's only key because we're anticipating some type of volatility to be injected to either create a continuation to liquidity or a reversal to liquidity, all right? One of two things, nothing more, nothing less, no need to overcomplicate it, all right? And you're not going to learn it in a 5-minute trainer, okay? You're going to learn it live. All right, so I like this sell-off here. So we took the high, okay, above the engineered, and sweeping above this daily buy side liquidity once more. We entered the upper end of that daily fair value gap. And like I said, what I want to see now is to just rip through the face of, number one, this gap, which initially looks like we're going to do, and then below the swing low, okay? So yeah, see how it's like already rolling up? Okay, that's not what you want to see. You want to see heaviness through here. Alright, so what I'm seeing here is we get above the buy side liquidity. Okay, we create a swing high. We drop below. Here's this up close candle that we're waking up into here, the very low of it. I would like to see that act as resistance and keep us lower. So the only thing that'll get me enticed here, like I said, you definitely never want to be the guy that picks the top early on. Okay, you just want to wait and allow it to become obvious. Not to say that we're not gonna we're not gonna wait for it to drop down and be like, oh, okay, well, it took this low, now I'm gonna consider shorting. No, all I need to see is it disregarding this gap and this one. Okay, and then I would look to reasonably enter the marketplace. So like me entering right here is simply just that would definitely be foolish. All right, so like I said, we're working in this up close candle here and the small gap within that. We're gonna see if this can create a swing high now and really displace. While I'm saying that, let's keep reminding ourselves that we're not trying to pick any type of top. Okay, it needs to become very clear and obvious, and the signatures that I outlined in both episode 1 and 2 in the mentorship tab is what I need to see. Okay, so I made those videos for a reason, and it's if you want to come into the sessions and actually know what we're looking for before the fact. Okay, before anything's even printing on the chart. Okay, you're gonna find that in the videos that I'm making for you guys. Okay. All right, so we're forming a swing high out of this up close candle here, so that's exactly what I wanted to see. And we are pinning below this reg up here, so nice. Perfect, so we created that swing high, nice, nice. Alright, so I'm going to go ahead and short these down close candles here. Or, sorry, not down close, up close candles. So I'm going to short the low here. Okay, I guess it didn't place in a stop loss for me. So anyway, stop loss is above the 2 up close candles here. Like I said, I don't know if you guys can see the failure at the left side of the chart. So anytime I try to add more contracts on, which I would like to do, it just says limit order rejected. But anyway, here is 19 handles in profit. My stop loss is absolutely at break even. Okay. Now the context here is all I needed to see is the initial disregard of this gap right here after taking the buy side liquidity. Okay, we formed an intermediate term high, and then I'm shorting the very low of this these 2 consecutive down close candles here. So I'm getting in tune with bearish order flow by selling the bearish order block. Okay, and obviously the stop goes above there, and the rest is, you know, what we're gonna see to play out here. And then yeah, I'm just gonna go for the internal low here. Matter of fact, I don't even need that. I'm gonna go for a midpoint of this near-term discount wick. So basically I'm aiming for this discount rejection block here. Okay, so this will be sell side. Okay, beautiful. All right, there's full take profit delivered. So let me know if anyone took that with me for certain. So 25. Yeah, so about 70 handles there. Beautiful. So let me know if anyone took that with me. Okay, it was a very easy entry off the bearish order block here. Okay, not your traditional retracement entry, but it certainly wicked up into it, and that to me was a very clear indication for me to short down to the sell side liquidity here. So you know, I sat here for a while. Honestly, I was feeling pretty discouraged because it really wasn't giving me my entry model originally, but I found my footing here, and you know, it probably will reach this low here, to be honest. But I don't really care. Okay, this is the this right here is all I need. Okay,